this is an area where we are expecting to break, reversing to the upside. I need this candle forming by this, having a low in order to confirm that we are going to be continue in the upside. We take a buy from the next candle, expecting the market to move up. Our target is gonna be, so let's see what the market is gonna give us from here. We are moving up, consolidating a little bit, breaking up again. So now we have a confidence that we can continue upside. Stay above this area, we are going to continue upside. Took from the confirmation of a what? Of a reversal breakout. Remember, we entered from this area by expecting the market to move, and then we got to our target. Welcome to the Trading Focus once again. Welcome to the new video of lesson 22. Welcome to our lessons of trading strategies and different kinds of basics in order to enter the market by making money. Guys, in our previous videos, we talked about different ways of trading in the market. We explained all about the chart patterns, the formation of the candlesticks, how to enter the market, where to set a stop loss, and how to exit the market when you take a profit or you are likely to take a loss. So most of the professional traders in the world, they enter the market by using the strategy of breakout. However they enter the market, whichever the confirmation they are using to enter the market, they all trade by the confirmation of breakout. Okay guys, that's why today's video we're going to look on what is a breakout. How can we confirm that we are going to continue in the same direction with the breakout, or this is the sign of the reversal of breakout? How to enter and set a stop loss and where to exit from by using breakout. How to identify between types of breakout. That sounds amazing guys. We'll be back in the minutes on our today's video. Just remember to subscribe on the channel, leave the comment below and share to your friends and like the video. We'll be back in the minutes on our lesson 22. Okay guys, welcome back to our lesson 22, breakouts. What is a breakout? How can we trade breakouts? Okay, let's start from there. How can we take advantage of them? Breakout occurs when the price breaks out of a consolidation or range. Okay, when we break out from the consolidation, that's a breakout. With the breakout trades, the goal is to enter the market right when the price makes a breakout and then continue to ride the trade until volatiles dies down. Okay, what are we talking about here? This is when you enter the market, like for example, if we see that the market is moving up like this, high highs and higher lows, and the time of consolidation is that we are in indecision direction of the market. So the time we are waiting for the breakout, we need the breakout and continue to the upside, continue in the direction we've been expecting to go. Okay, that's why when we break out, we need to look for the confirmation that we are going to continue in the direction that we are anticipating the price we continue in. Okay, so let's continue here with the types of breakout. Types of breakouts, there are 3 types of breakouts. Okay, so we have a continuation breakout, we have a reversal breakout, we have also a fake out or a false breakout. Okay, so we are going to explain one by one from these breakouts and how can we use them to enter the market. Okay, knowing what the type of the breakout are, knowing what type of breakout you are seeing will help you make sense of what is actually happening in the big picture of the market. If you know the type of the breakout, it's going to be easy for you to identify which kind of the breakout are you expecting and which direction of the market are you expecting to go with, so that you can enter from there by taking a buy or sell. Okay, so breakouts are significant because they indicate or they show us a change in the supply and demand. They show us where to enter the market by buying on where to enter the market by selling from, okay, with the currency pair you are trading. So let's start now from the type of breakout, which is a continuation breakout. Sometimes when there is an extensive move in one direction, the market will often take a breath. When we are moving like we are moving down like this, the market will take a breath and start consolidating. We don't know where the market is gonna be breaking. So this occurs when the buyers and sellers pause, like we've been talking about. We are making high, low, equal highs and equal lows. We are in the consolidation, okay? So to see what they should do next when we are in the consolidation, we have to be careful and wait until we breaks out in order to know the direction of the market, okay? So as a result, you will see a period of range bound movement called consolidation. This is what we are talking about. If we are moving down, this is a consolidation. We are starting from this area, consolidation. So when we get this consolidation like this is a consolidation. So after that consolidation, we are going to expect the market to continue in the same direction, okay? If the traders decide that the initial trend was a right direction and continue to push the price in the same direction, a result continuation breakout, okay? That's why we are getting the name continuation breakout. Just think it as a continuation, okay? So if we are moving down, like we've been talking about, high, low, lower high, lower low, lower high, lower low, and then when we reach in this area, we start consolidating like this, high, low, high, low, high, low. By making equal highs and equal lows, we are in the consolidation. At that time, we are in the downtrend. Remember, we are making low, lower high. This is a lower low because we broke the previous low. This is a lower high. So now we broke the previous low again by making a lower low. So this consolidation is a lower high in general. We are in the consolidation. What we need to see is to break out and continue in the same direction, okay? You can ask here, why can't we enter if we confirm that we are in the downtrend? Why can't we enter right away when we get that pullback and we enter for the continuation? The problem is this consolidation. If we get this consolidation and we are not already in the market, we have to be careful because we can get a fake out upside and we take a loss from the trade and then the market continue to leg down. That's why we have to be careful by entering in the consolidation. So the continuation breakout, that's when the market is moving in the uptrend, for example, and then that formation of consolidation will appear and then we'll be breaking out by continuing in the same direction. So that's what happened here. We broke below from this consolidation, and guess what? What happened here? We started another consolidation from another area by also expecting the breaking down below and continue in the same direction. So let's take a look at an example from the chart. Here we have DXY. We are now in the consolidation. The market is moving down. Okay, as you can see from this area, we are moving down. So this is a lower low and this is a lower high. But by making a lower high, we are in the consolidation. This consolidation is where we are waiting to break from and continue in the same direction. Remember in our previous videos, we've been talking about the different kinds of chart patterns. So any kind of the chart patterns formation time, when you see any chart pattern, remember we are in the consolidation. Remember in our previous video, we've been talking about the what? Falling wedge and the rising wedge. This is a what? This is a rising wedge. This rising wedge will appear in the what? In the trend continuation. Okay. So where are we gonna be entering from? How can we draw from this area and then we can confirm that we wait for the confirmation to continue in the downtrend? Okay. I'm gonna connect the areas which had been tested multiple times. We tested from here, also tested from this area. We rejected from this area by faking out. I will talk about the fake out in next. Okay, so we continue to reject by not breaking above this area. So this is the area of what? of resistance. So areas of support, these are areas of support from this area here where we have been rejecting from downside multiple times. So we are now in the consolidation. As long as we break below this area, we are going to be expecting the market to continue in the same direction, okay, downtrend. So, and when we get that confirmation, that's when we are going to be targeting the areas where we rejected from before. Let's see what the market is going to give us in the minutes so that we can confirm the direction of continuation breakout. Let's see what is going to happen here. So now we got a candlestick that confirm we broke out, okay? Remember in our previous video, even if we are looking for this formation of a rising wedge, this we will be entering from this area. But here we are looking also in general a breakout, okay? So there is someone who will be entering from this area, but let's wait and see and enter from below when we break these stronger rejections, okay? So we broke below the previous low, this one. What am I meaning about the breaking below and confirm the continuation of the downside, okay? So I was looking for the candle that can break below this support and then we continue in the downtrend. The reason is why most of the many candlesticks rejected from this area by not closing below. So now we got a candlestick broke and closed below as a confirmation of a trend continuation. So we are going to be entering from there and continue downside area, okay? So we're gonna be taking a sell, expecting the market to continue in the downside. So by the way of avoiding the fake out, let our stop loss have to be above or the high of the previous of the formation of the consolidation, okay? So we entered from there and we're expecting the market to continue downside. Let's see what the market is gonna give us from there. So the market continue moving down, rejecting from there, consolidation. This is also a consolidation. Let's see if we break below even here, maybe we can continue down, okay? Let's see what is gonna happen. Consolidation, fake out upside, we continue downside. If someone was to enter, you have to enter also from the breakout from there, okay? So let's continue and see what happened. So we are still in the down area. We are pulling back. See what is gonna happen. So this is what we've been talking about. So when you enter from the areas of consolidation, that's why the stop loss have to be above the previous high, above the previous stronger high. When you enter with no confirmation of breaking out and retest, what am I talking about by that? Is the breakout like this and what? And the retest. We didn't get that breakout and retest. That's why we entered from this area. So that time also you have to keep in your mind this. As long as you think that the market, anytime we can pull back, you have to take some profits from the areas that we've been talking about. These areas, this one and this one. These are three areas where you can take a what? You can secure some profits, okay? So now we rejected from there and we came back in the consolidation. So let's see what the market is doing here. Maybe we can get another consolidation, okay? We are still consolidation. So this is also a consolidation from this area to this one. As long as we break below that consolidation, we can even look for how we can enter for sale. Let's see. Okay, now we broke down from there. So here we can also set our sell stop so that we can continue in the downside area. So we are expecting for the next candle, my stop loss is gonna be above the previous high from this area. So even where I entered before, I can take my stop loss to these areas. I'm confident that the market is gonna continue down areas. So the stop loss, my target will be the same as the previous target. Okay, let's play it and see what happened. Okay, the market continue moving down as we are continuing making lower lows and lower highs. This is a confident that we are going to take our profit. You can even here bring your stop loss to these areas because you now started having highs. Okay, so let's see what is going to happen again. Can continue downside. So we broke the previous stronger low. So now we have a confidence that we are going to take our profit. Consolidation breaks out and continue downside. That is a breakout, continue downside. Even here was a trade we should be taking from this area and continue downside. Okay, that's how we trade. The continuation breaks out. So we are approaching taking our profit. So the market keep moving down, consolidation. We are expecting to break below and continue downside. Let's see what happened. Okay, we faked out and continue downside. So we got to our target by taking 3 trades. Should be more trades that we could be taking from here. So that's how we trade a continuation breakout. Okay, so this is what we've been talking about. Okay, so as we consolidating from this area, the market breaks below. We consolidate again, but remember we confirm that we are in the downtrend. The market also again consolidating, but also we broke below and continue downside. Okay, that's how we trade a continuation breakout. Next, a reversal breakout. Remember the word reversal, the change of the direction of the market. Okay, so here reversal breaks out. A reversal breaks out starts off the same way as a continuation. They start the same way because it's a breakout. Okay, so in the fact that after long trend, after we've been moving in the uptrend or the downtrend, we are going to be expecting a reversal of changing the direction of the market. Okay, so now this is an example here from this area. We are in the consolidation. As we are consolidating from this area, we are expecting the what? A reversal to the upside. You can see from here, this is a bottom 1, this is a bottom 2, this is a bottom 3, and this chart pattern is a what? A triple bottoms. Okay, so now we are expecting the breaking out from this area. These areas are neckline, remember in our previous videos. So you have to even combine all those facts in order to get a confidence and enter the market. Okay, so we are expecting the reversal. If we are moving down from this area, we are expecting a reversal to the what? To the upside. Okay, let's keep moving and see some examples of how we can get that confirmation and we enter on the market by a reversal breakout. Okay, now let's take an example from pound USD. So the market is moving down. As you can see from these areas, we are making low, lower high, lower low, lower high, lower low, lower high, low. We failed to continue in the downside area by making a high. So that's where we're gonna be taking a look from these 2 bottoms as a stronger area we rejected from, so that we can reverse by forming. We can reverse from there in this consolidation and waiting for the breakout to continue in the upside. Okay, so we rejected from these areas. Okay, we rejected from these areas. So where are we gonna be expecting to break from? And then we can take a trade by taking a buy, because you are expecting the market to reverse. We've been moving down. You are expecting the market to change the direction to the upside. Okay, so this is an area where we are expecting to break and then continue or reversing to the upside. Okay, so this is a consolidation. We need a breakout and starting an uptrend or a bullish reversal. Okay, so let's see what the market is gonna give us. And when we break out, remember what we are looking for. We need the candle that breaks out and close above this resistance. Okay, that's what you're gonna be looking for. If we get that candle, I need the next candle to be making a low before we start making a high, I need this candle forming by this, having a low in order to confirm that we are going to be continue in the upside. Okay, so that's what I'm going to be looking for. Okay, now let's see what the market is going to give us. So we broke out. So as long as we broke out from this area, we are going to be entering from there so that we can expect the market to start uptrend direction. Okay, so I'm going to be taking a buy. We take a buy from the next candle, expecting the market to move up here. As long as I entered from this area without waiting for the breakout and the retest, that's why my stop loss is going to be down. Remember, we are changing the direction. Our target is gonna be looking for more pips. Okay, so this is our target from this area. Let's see if the market is gonna get there. This is our previous area where we rejected from multiple times. Okay, so let's see what the market is gonna give us from here. Okay, now see, we are moving up, consolidating a little bit, breaking up again. So now we have a confidence that we can continue upside. Okay, so as long as we stay above this area, we are going to continue upside. Okay, let's see. So we reject from here by retest. This is where also you can take another trade. You can take another trade from this area as a confirmation of breakout and retest. Also, this is the way of trading breakout. Okay, there is a time where the trader have to confirm the uptrend or the change of the direction by breaking out and retest by making a high. This is how it's done: a high, a higher low to go for the higher high. So also remember, in our previous videos, when we've been talking about the formation of different kinds of the chart patterns, like for example double bottom, where you have a neckline, when we break above the neckline, we wait for the confirmation by pulling back so that we can enter from there with those bullish candlesticks. Okay, so let's also enter from this area and see what happens if we can continue in the direction we are expecting. At this time, the stop loss will be below the previous low. The previous low is this new support. Okay, let's see what the market is gonna give us now. Okay, we are still moving up, consolidation. We are waiting for how we can break out. We are still consolidating from that area. Okay, so this is also consolidation. We are starting breaking out by faking out, and then we are in the consolidation. Also here we can wait for the breakout. We got another breakout from this area, so here I can also enter for buy again. Even our previous entry, we have take our stop loss and shift it to this area because this area has now become stronger. So I'm gonna be entering also for the third position. Okay, I'm gonna be enter from there. Stop loss will be below the previous low. Previous low am I looking for? This one. Okay, this is the previous low. Even this one have to be below these areas, like this, like this. Okay, it's gonna be 1 to 3 maybe. 1 to 2.5. Okay, let's see if the market can continue upside. Remember, as we are making our higher highs and higher lows, gonna be looking for how we can shift our stop loss and minimize. Okay, let's see what happened. Okay, moving up, breakout and retest. So here I can also take a trade. So I'm gonna be entering from that area. So by expecting the market to continue upside. Remember, we are trading a reversal breakout. We entered from this area, but by the confirmation of any kind of opportunity on trades you have to take, I'm not gonna skip this also in order to show you how you can trade it. So if we continue moving up, we are going also to shift our stop loss, maybe to break even from our previous entries. Okay, now we continue upside. So I can shift my stop loss to these areas. Okay, I will shift also these ones to wait and see. So now we continue to move upside. So now I can take my stop loss to break even from these areas. I'm gonna be marking this area break even. Okay, from this red line, I'm no longer having a stop loss from here. What I have now is a profit from here to this area. Okay, so let's see if we can also continue upside with our 4 positions. Even this one have to be in these areas below here. Okay, so let's see what happened. We continue moving upside, consolidation, faking down. Okay, let's see here. Upside. Okay, that's also consolidation. Upside, continue upside. Okay, this now become also consolidation from this area. Let's see, we can break up. Okay, rejecting from there, so aggressive, but we changed and continue upside. Also, you can see from here there's also some entries. Okay, let's continue and see. So we faked out and we are still in the trade. Okay, continue upside. Now let's see what happened, what the market is gonna give us. Be patient and see what is gonna happen. Now I can also shift my stop loss to break even. Now the break even of this, all of these trades will be below the previous low. Previous low is gonna be this one. Break even from here. Okay, I'm gonna color red. Red is a break even. Now we are still in the game. So let's continue and see if we can get to our target. But now we are already confident that we are going to take our target. Okay, now we go to our target. How many trades we took from here? Amazing, 4 trades we took from the confirmation of a what? Of a reversal breakout. Remember, we entered from this area by expecting the market to move up, and then we got to our target by taking also 4 trades. And in those 4 trades, we also got an opportunity to enter from the what? From the continuation breakouts. Okay, that's how we trade a reversal breaks out. Okay, so after consolidating for long, so we end up confirming that we are going to change the direction to the what? To the upside. We've been moving down, we got this consolidation, we break out by a reversal breakout to enter from this area and continue upside. Now let's talk about the fake out or false breakout. Okay, let's take an example. Remember, in the football, like CR7 or Cristiano Ronaldo can fake out the defenders. Like for example, if Cristiano Ronaldo have the ball, showing the defenders is going to shoot or is going to continue forward and change his mind and take the ball back to Evra or Marcelo, that's where Ronaldo is going to be faking the defenders, that they expect him to continue accelerating and change his mind and pass the ball back to the defenders. That's how we got fake out also in the market. You are expecting the market to break out and continue in that direction, and you end up faked out by the market, and we came back in the consolidation. A false breakout occurs when the price breaks past a certain level. Okay, support or resistance, triangle or any kind of chart pattern, okay, or trend line, but don't continue accelerate in the direction and does not continue in the same direction that you are anticipating to continue moving in. Okay, so we are going to take a look on examples. Okay, from this area you can see here, if the market is moving in the consolidation like this, you got this low and you got this high. As long as, remember I was talking about breakout and close above the support or resistance. So now we are expecting maybe the market to break out with the upside direction, but we broke out from this area and rejected from this resistance, and we came back in the consolidation. The time when we got this fake out, there are many traders who are beginners be attracted by this movement and enter directly the market, and where they got the loss. Okay, so also here we faked out with the candlestick that closed above the previous high, which is a resistance. So as long as you break above, we need to see the candle or the next candle to start breaking above the previous candle, so that we can confirm that we have a volume, or we are confident that we are going to continue in the upside. So as long as we are not as long as you are not breaking above the previous candle, the previous high of the previous candle, we are not going to be confident that the market is going to be continue upside. That's why we have to wait for the market to see if we can get that confirmation. As long as we are waiting, so at that time it's better to even wait for the breakout and what? Breakout and retest from our previous high, where we can confirm the upside or the downside with the formation of support, where this resistance is going to be turning into support, or where this support can turn into resistance, so that we can enter from there for sell. So that's how we have to avoid the what? The false breakout or fake breakout. Okay, a good way to enter the breakout is to wait until the price retraces back to original breakout level, and then wait to see if it bounce back, create a new high or low depending on the direction you are. Okay, now let's take an example from GJ. So we are in this consolidation from this area. We don't know if the market is gonna break out by going down or moving up. This is an area we are gonna be looking for. So we need the market to break out and retest from this area so that we can go for the higher high. If you see from this formation, it will be clear that we are going in the uptrend. So let's see if the market give what we are looking for, so that we can enter from there by taking a buy or a sell. It will depend on where we are going to be breaking out from. Okay, now let's see. Okay, we broke out with the high volume, so let's wait for the retest or the pullback to retest in our previous high, so that we can confirm a signal to enter for buy. Okay, can we get okay, we are still up. Let's see, we have to be patient and wait until we get that retest from our previous high, so that we can confirm an entry to go for buy. Okay, now we got a hammer, which is also a bullish harami. Now we are going to be entering from there and take a buy. So we tested from this. This is also a neckline. We broke out and retest, so that we are going to be expecting the market to go for the high. That's why you are going to take a buy with the confirmation of hammer or bullish harami. We are going to take a buy by expecting the market even to reach in these previous strong areas. Let's see what is going to happen now. Okay, we are moving up. Now we are moving up. Okay, equal lows, we are still above this area. Now we decided to go for high. We are in the good movement of getting to our target, consolidating from this area. Let's see if we can break above and continue upside. Consolidation again. Let's see if we can be patient and break above again. So now we are still expecting the market to continue to the upside. You have to be patient and wait until we get to our target. So we are now playing our ball outside of consolidation. This is also a consolidation we are creating from this area. As long as we break out, we are going to be continuing breaking. Okay, now we go to our target by breaking above the previous high and get to our target. That's how you have to avoid the breakout. If you want to be safe in the market, wait for the breakout and retest from your area, so that you can confirm that trend is strong enough to go with. So that's how we use the breakout, by avoiding fake out or false breakout. Okay guys, thank you so much for your time. Remember to subscribe on the channel, leave the comment below if you enjoyed this video. Until next time, take care, be safe.